Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time it's Jakarta's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. One of the activities we get involved in is pre-immigration tax planning. So whether you're moving to the US or Spain or Portugal or UK or whatever, it's always a good idea to sit with someone and plan it out first, especially with those jurisdictions taxing your worldwide income. So you're moving from a jurisdiction like Indonesia that already taxes your worldwide income to another one that does the same. So the structures that you may have in place that may work in Indonesia may not work in the US and vice versa, right? So you're trying to plan for both jurisdictions because 9 times out of 10, even though you're moving, you still have assets here, you still have members of the family here, so you need to plan for both. So to answer your question, we get involved with the planning process as soon as possible. And when I say as soon as possible, like for example, one of the first things that families would ask, I guess because of Netflix or movies or whatever, is what about a trust? So that works on Netflix. It doesn't work in real life, right? So it doesn't immediately relieve you of certain tax responsibilities. It may work pretty well with asset protection and succession planning, but when it comes to tax planning, no. The IRS has they're ahead of the game. So there are a number of code sections in place that mean that if someone is planning to move to the US and they just set up a trust and they move, it does nothing from a tax point of view. In order for something like a trust to be effective, you need to set it up 5 years or more in advance of the move. That's not the only tool, but that's the most popular tool that people ask for. Another tool for particularly for high net worth individuals would be something called a PPLI. This is a personal life insurance policy. It's a wrapper. It's getting a bit of scrutiny, but it is legal and it does work not just for the US, but it works for Europe as well. So essentially, what we do is we sit with the family and we go through their assets. We ask them to, in advance of the meeting, to set up a spreadsheet and they itemize all their assets. And we go through line by line and we help them understand the tax implications on that asset once they make the move to Portugal, UK, US, wherever. And if they're comfortable with that impact, we leave it alone. Otherwise, we have to look at options to mitigate, if not eliminate. And sometimes it may mean, hey, we need to put off the move to the US. We need more time to get things set up.